What if I told you that only 14% of accountants are actually using AI in a meaningful way? But at the same time, the entire industry is about to shift faster than anything we've ever seen. Most bookkeepers are either panicking or completely ignoring AI. So in today's episode, I'm sitting down with Joe Woodard, the founder of Scaling New Heights. You may have heard of it. And we're diving into what's really happening in the accounting industry right now. We talk about why the AI hype versus denial debate is missing the point, what tasks you should actually be handing off to AI, why moving off hourly pricing isn't enough anymore, how to position yourself so clients see you as indispensable, and how to make sure your pricing model matches your vision and goals. This was a really, really beefy conversation. So in order to prepare for it, I want to make sure you have a notebook handy. And when you're ready, let's dive in. Welcome to the Ambitious Bookkeeper Podcast. Hey, Joe. Welcome to the Ambitious Bookkeeper Podcast. I'm super excited to have you here today.
Yep. It's good to be here, Serena.
Yeah. So I don't even remember how this interview came to be because we've had it on the calendar for quite some time, but I think someone reached out to me from your team wanting to have you on the podcast. And I was like, yes, actually, you've been on my list for a while to source as a guest.
I'm glad that worked out.
So I love to bring really quality guests to my podcast. And most of the time I don't accept pitches and I bring people that I want to have conversations on with because that just makes for a more quality podcast, in my opinion. So I'm really excited to have you here.
Yeah, a big commercial. Who wants that? Yeah.
Yeah. So let's start with, out of my own personal curiosity, what's your background and how you kind of built what you have now and ended up where you're at?
Well, interestingly enough, my background is not in accounting. I have a bachelor's degree in classical Greek. That's a nice waste of a 4-year education. It's just above basket weaving. Not the Greek language of today. That would be valuable. Classical Greek, where nothing is a dead language, is a real good use of 4 years. So kind of I had this rude awakening when I embraced life and realized you can't make money at translating classical Greek. So I got a job at a staffing company, and they placed me with a CPA firm to do office work. And the CPA firm saw a lot of potential in me and said that they'd like to send me to the University of New Orleans so I can study accounting. And they wanted me to become a professional in their firm. And this was before the staffing crisis, Serena. This was back when you could still hire accountants. But I guess they just saw something in me. And I would think that's true because when I sat through my first class, I fell in love with accounting from the moment I was introduced to a debit and a credit. So they kind of picked up on that spark. Mm-hmm. And then then I kind of went back and I was a little bit more of like an intern than I was an office worker, picking up the skills. And one thing led to another, and here I am. With one exception on their master plan. They wanted me to get enough credits to sit for the exam, mm-hmm. and that I never did. I got distracted by the technology side of the profession, and that intrigued me so much that it just kind of distracted me from the CPA path. And so, but still, here I am.
Yeah. I've always thought that the people that choose to go into accounting and couple it with that IT background are probably the most marketable. And I thought that back in college too. And it turns out that's definitely the move.
Even more true today. That's correct. Yes.
Yeah. So now you run, if you're a listener and you are hearing Joe's name, you may be familiar with his event, Scaling New Heights. So how did that all unfold from the beginning of your career to now where you're putting on these pretty big events for the industry?
Yeah, that was kind of a corner turn a little bit, but it evolved out of my experience. I was what they call today a standalone CAS practice, or a non-credentialed, I like standalone better, a standalone CAS practice. That's what I had. We just didn't know to call it that. I was doing not just bookkeeping, but controllership services skills. And I was coupling it with accounting technology and some business advisory. So I was basically a CAS practice with a strong technology bent. And I was servicing larger clients, which I would encourage your listeners, if they don't have any clients that are a little bit larger, say 2 to 5 million, go ahead and jump in that deep water. It's not as scary as it looks, and there's some really good money and opportunity there. But what I found is I'd started moving into that segment Some of my most notable clients were Elf on the Shelf, the maker of the little kids' children's toys. Yeah, I helped them get over the hump before they went into enterprise level software back when they were, smaller. Big Green Egg, before they became a big national company. We did all their management on QuickBooks and inventory systems. So it's really fun to be a part of people's journey when they're going through that phase. And all of that was because I had scaled, here comes that word, into a larger clientele. So I wanted all of my peers, my fellow QuickBooks consultants and bookkeepers and some of my CPA friends, I wanted them to start doing that kind of work for a little bit larger client because I was enjoying it and I saw the opportunity. So I created the first conference, Scaling New Heights, because I wanted them to literally scale into what had just been launched as QuickBooks Enterprise Solutions Desktop with some of these add-ons for the mid-market. That was the whole point, is scale to the mid-market. But what I found is there was an unaddressed market need out there where QuickBooks consultants, because they're still dominant today, but that was really in 2007, when I launched this, that was the world. So I found that all these pro advisors just wanted to go someplace because they had nothing. There was no Intuit Connect. There was no QuickBooks Connect. And they all flooded in whether they were interested in the mid-market or not. And I thought, okay, well, I need to pivot. So from the second Scaling New Heights all the way up to today, Scaling New Heights has meant scale new heights in your practice, not scale to a larger clientele. So I flipped starting in year 2 because I listened to the market and I listened to my attendees, and that's what they wanted.
Smart. Everyone take notes. It's
hard to listen to your customers. Isn't it funny that way?
Yeah.
Yes.
Yeah. It's like we know that deep down, but do we always pay attention?
We always
Probably
pay attention,
not.
Yes. But are we willing to change, right?
Yeah. Yeah. So I actually have never had the pleasure of attending the conference at all. I'm on the West Coast.
Yeah, let's fix that.
And it always lands during a time of the year when I have like other family events going on or something. So it's been difficult to get all the way over there.
Graduations, family reunions.
Yeah. But one of these years, maybe not this year, but maybe next.
That'd be great.
So I'm really excited for this conversation because like before we hit record, it was kind of like we could go in any direction. We'll just see where the conversation goes. But one thing that I wanted definitely to talk about is kind of where you're seeing the industry change. And I'm sure you're going to be addressing this a lot at Scaling New Heights.
We're themed this year to Strange New World. So
yeah,
it's a very strange world out there right now.
Yeah. But, what is because you've been talking about advisory and moving into that area for a while, as have most people that are thought leaders in our industry, because that's kind of, that's just been the conversation for years and years. Now it seems the most prevalent. Like 5 years ago, I would say, yeah, for some people that makes sense, but not for everybody. But now if you use the AI built into Xero, like there's hardly any data entry anymore.
Yes.
So what are we going to do with our time? And it only makes sense to go deeper with clients. So what are you seeing in that area of like tools that have greatly improved the workflow for people to be able to step into that? What are you seeing with like how people are approaching things, or the mindset shift that you've had to help a lot of bookkeepers through? Anything you want to talk on in that realm?
Well, let's start with the mindset shift because, and of course, all of this is very current event. There have been mindset shifts as we've worked our way into the cloud. We had big mindset shifts, and now we're working our way into AI. So I could look at this in terms of horizons of decades.
Yeah.
But just focusing on, say, the last 12 to 18 months, which in the world of AI development's ancient history. So just let's look at that window from 18 months ago till now. I'm finding that the mindset is tending to be polarized. Either you're panicked and rapid pace adopting, or, just because you love new technologies, you're rapid pace adopting on that extreme. And on the other, I'm getting either resistance or denial. And it's mostly denial. Because it's a really easy confirmation bias to embrace that all of this is just hype. And the reason it's easy to embrace is because 18 months ago, 12 months ago, 6 months ago, there were all varying degrees of hype. There's hype today. But the gap between hype and reality is closing faster than the pace of any technological development, and I'm not being hyperbolic, in the history of technology. And it's because of the nature of AI. It's not just a technology human minds are building, it's a mind that helps to build itself, and that creates exponential growth. So if you're reading articles or you're seeing book titles or you're hearing people say it's all just fake or it can't do this. I just had somebody send me an article, that the majority of accounting functions are still wrong by AI. But and I respect her and I get that. I'm going to read the article and there's probably data to back that up. But the reason you have to look really hard at this segment, listeners, is because a lot of the people who are saying it's wrong are going to LLM prompts like ChatGPT. They're feeding it financial statements, and hopefully they're doing that with a privatized version. And then they're saying, build a financial statement. All right. Obviously, it's going to get a lot of things wrong. I mean, I just tried that in Anthropic just to horse around earlier. And of course, privatized version about a week ago. It got about 80% of my financials built out right, which is just nothing but bank statements now. And it asking for a little bit of follow-up information, which is good to do. It'll ask me questions. And I didn't give it a chart of accounts or anything. I said, go create a chart of accounts, and based on my company type, give me a good one. I mean, I went from nothing, and it got about 80% there. So you might see an article that says only 80% accurate or creates, unreliable outputs. And you see that headline, and you're not realizing they're not talking about Xero's artificial intelligence, which is built into their period close feature, which is controlled, structured, custom designed for the accounting profession. They're talking about a generic prompt with nothing but a bank statement. So you got to compare the apples to the apples. And so the biggest takeaway I would get, so if we're looking at the extremes, right? The mindset is denial or sort of panicked adoption or enthusiastic adoption. And in the middle, I'm not seeing where we need to be living. Where we need to be living is respond to what is happening. Don't ignore it. Don't react to it. If you think that you're behind and the train's leaving the station and you need to get caught up, let's dispel that thought. 14% of accountants are using AI in a meaningful way in their practice. That's a stat that just came out. One of the developers of Silicon Valley shared it with me. I have to admit, I don't know their source, but I trust the developer. And so let's just say that that's marginally correct, 15 to 20%, somewhere in that range, as compared to other industries like computer programmers that are over 90%. So you are not behind. However, you don't have the luxury of time. So your mindset needs to be learn and respond.
Yeah.
And learn from trusted resources.
Yeah, that I think that's a really key piece. And that's one of the areas that is like, well, if you don't know who to trust, maybe like start just doing your own research.
Thank you. And here's the problem. The developers are the ones that are generating a combination of hype and reality because they have products to sell and they have market price, they have share price to preserve. So you can't necessarily trust them by themselves.
Right.
Right. But then if you listen to the enthusiast or the deniers, then you're not getting perspective either.
Right.
So you're going to want to get people who are well-researched, who are objective, and are just following the facts, right? And who also understand the profession.
Yeah, that piece is really key. I did a YouTube video not that long ago on utilizing the AI system built into Xero so far, and it's in beta right now. So I was kind of tinkering with it on screen and kind of talking through like my thoughts and how I would use this and where it kind of falls short. And that's what people need to do. You need to tinker with it and experiment in order to really understand how it's going to work for you and your process. But the other piece of it is the whole, like, just like if you were to bring in a junior accountant in your firm, you want to be reviewing their work because they're junior. And that's kind of how I look at the AI is like, it's a junior accountant at this point. It doesn't know everything yet.
Insightful, Serena. As a matter of fact, there was a report that just came out from Microsoft. Keep in mind, they're the developers of Copilot, but okay. There's a report that came out from Microsoft where they were saying that in the team structure of the future, in any industry, in any profession, the people that are leading those teams are going to have a combination of what they refer to as an AI worker and a human worker. And, when we're talking about the way it's intersecting the bookkeeping profession, I want you to think of it, bookkeepers, not as displacing you, because it can't feel, it can't care, it can't understand what the psychological and emotional reactions of the business owner are, the political dynamics between that business owner and their team members, between them and their vendors, them and their customers, them and their family. It doesn't understand. It can pretend to, but it can't really discern all of those pieces. It can't replace you.
Right.
And it can't and shouldn't ever make judgments about what a business should or shouldn't do, or provide guidance for the direction of that business as a coach or mentor. It can't do any of those things, and it can't do anything with physicality. But what it will do is it will replace certain tasks. So the question you have to ask is, which tasks do I want to give it? And which tasks do I not want to give it? Is that not the same question we would ask of an employee?
Exactly. Yeah. Yeah. The human touch piece is one of the things I talk about a lot too, is we're always going to be needed for that. Where I see the fear happening is when I coach and mentor a lot of bookkeepers, and some of them have a lot of experience and some of them don't, and they're newer to the profession. And I think there's a lot of fear of those newer to the profession that are really afraid of their jobs being taken. And so what do you say to maybe some of those folks who see the writing on the wall and they're like, okay, I got to learn how to do this so I can oversee AI, basically? Like, what do you think is the next step for that person to get more comfortable with the oversight role rather than the doing?
Yeah. Okay. So already you're reviewing your own work. I mean, you might be listening to this podcast and you have no employees, but you're wearing a couple of hats. You're the financial information input person, you're the financial compiler, and then you're the reviewer, and then you're the account manager. You're just wearing all the hats, right? So just break your desk up, break your role up into chunks, and separate you from the roles. And then continue to keep yourself into the roles of reviewer, account manager, and the person that's only the client relationship. A CPA firm would call that the partner in charge, right? Or the partner of the portfolio. But you're the owner, the company, so you manage that way. And the only role that you are delegating is the input and the capture. It's just really a way of bifurcating out your desk to the things that you can and cannot delegate. So the encouraging thing is you're already a reviewer, just of your own work.
Yeah.
Take that process and apply it to AI and review its work. And as far as that other first part of your question, Serena, what do we do to go get more familiar with it? Where the developers are doing a great job is when they don't form opinions about the future, and they're not writing marketing materials for a billboard or a Super Bowl commercial, when they are training on the program, because there are different people in the organization that are doing that. And the only thing they care about is usability and user enablement. So when you go into, say, Claude's own training about Claude Anthropic, or ChatGPT, or Microsoft's own training about ChatGPT, you find it to be methodical and accurate and objective. Go through that training. And most of those offer all of that training for free. All you have to do is set up a free account and then go. Now, the paid accounts are the ones that are more privatized, but you can set up a free account just to get to the learning materials. You just have to be very careful what you feed that free account. Yeah. So that would be the first step I would give people. And then I would say, don't try to go out and reinvent what developers are making huge investments to invent. You mentioned Xero several times. Xero has the resources. They're a multi-billion-dollar global company. Let them take the heavy lift of building out the tools that you need, and then go use their tools. But that doesn't mean you shouldn't still go through the ChatGPT and the Claude and the Copilot training, because the way you're going to use those tools is different from the way you're going to close a monthly period. And I'll give you a good example. If you have a conversation with a client, you have a recording bot record that conversation, and they want you to do a certain kind of work or maybe a special kind of project, a cleanup and catch up engagement or a conversion from one general ledger solution to another, whatever it may be. You can feed that transcript into an LLM, into a GPT, and ask it to write a proposal for your client. And that will save you an hour or two, starting that process from a blinking cursor. But that's different than going to Xero and closing a monthly period.
Yeah.
Yeah.
Yeah. That's a really good use of that. I never really thought of that, but I also don't do a lot of custom proposals. So,
well, can I give you one more too? That Xero just signed a multi-year deal with Anthropic, and Xero and Intuit has done the same thing with Anthropic and with Gemini and at OpenAI. So as these major platforms are forming partnerships with GPTs, you're going to have to know how to use the GPTs, because they're either going to be embedded into the general ledger solutions or they're going to be integrated with the general ledger solutions. You're going to have to make friends with prompting one way or the other. And that's where you can go to that training and get those prompt strategies.
Yeah, that's really smart. I mean, that's kind of the strategy I would recommend for learning any software. People always want to overcomplicate things and try to recreate the wheel. And it's like, just go and take the actual training from the software so you know how it's intended to be used.
Exactly.
Learn the rules and then break them.
Exactly. And the training program will even give you example prompts. It'll say, go try this one out. Or here's 10 more things that you may want to ask it. And it's fun just to take their prompts, plug it in, and see what happens. It's very interesting.
Yeah. So one of the other things that I was thinking about is another conversation that has, to me, seemed, well, I'll save my opinion for a moment. Do you think that the hourly versus value billing is still a conversation that needs to be had?
Unfortunately, Serena, it will be a conversation we need to have until the last timesheet is dead, right? So, but what I can tell you is it's even more of an important conversation now. Because as you're delegating work to AI, you're going to make yourself so much more efficient. And you're going to punish yourself for those efficiencies if you're charging by the hour. But the sneak attack here, Serena, that I'm seeing with the accounting profession is they will understand conceptually what I'm saying. And that's great. All right. So let's divorce ourselves from the timesheet. But divorcing yourself from the timesheet is only step one. The timesheet measures something. It measures effort and it measures time, right? Time and effort is the combination of those things. How much effort did I exert to produce this month's books? So if you divorce yourself from the timesheet, but you don't divorce yourself from the effort-based pricing, then all you're doing is moving from a frying pan to a frying pan. It's just that you don't have any measurement or controls over your effort anymore, and you're having to take guesses at what that effort was. So if you want to really make the jump and you want to get out of the frying pan altogether, it's to base your pricing on the outcomes that you drive, not the effort that's exerted to drive them. Now, I don't want your listeners to misunderstand what I'm saying. I'm not saying that effort doesn't matter. Effort is a management consideration for you. It is not a pricing consideration for your clients. There's a really big difference.
Yeah.
Yeah.
So in a real life example, say there's a client that this is where it becomes a little convoluted and difficult to measure that outcome, because you could have a client whose books are very complex. They probably take a lot of time. There's a lot of moving pieces that you're working to keep reconciled and accurate. However, the client continues to make decisions that don't result in good outcomes.
Right.
So it's hard to measure what we did was accurate. You know what I mean?
This is good because I get this one all the time. Your outcome has to be what you're responsible for, not what the client is responsible for. So I tell bookkeepers in a situation like that, and I like complex books. I say the more complex books, the better, because that's the less chance that they can reasonably offshore it, hand it to tech, get their Aunt Bertha's roommate's cousin twice removed by marriage because they know them and they like them coming in and do the books, all that silly stuff we deal with, right? You get the spouse effect all the time, or my daughter's home from college, she's going to take the books, all that weird stuff, right? And all that goes away the more complex the books are, because they can't fool themselves into thinking it's that easy. But the other thing that comes with complex books is cost displacement. Now you can go to the client and you can say, look, let's run the math. What would it take now that you can't hire your Aunt Bertha's friend? What it's going to really take to run this finance department in your back office? And here are all the things that you have to consider as you build that out. You have to curate your own technology, which is ever changing. You're going to need to build your own workflow process and put that into some kind of a step-by-step system. And by the way, that also has to be maintained and curated. You're going to have to build standard operating procedures so that the people you hire are doing it consistently in a way where that you can measure the quality. Then you're going to have to find somebody in this crazy market that we're in, where it's impossible to find qualified bookkeepers, who knows what they're doing. And I've been out to Indeed and ZipRecruiter and just checked, and one in your area costs about $65,000 a year, plus you have payroll taxes, plus you have benefits, plus you're going to need to give that person a computer, and that computer is going to wear out in 2 years. I could keep going. Mm-hmm. And then all of a sudden, I just want $2,000 a month, and they're going to say, where do I sign?
Yeah.
No way that they're going to try to bring all that in-house. And I've had people say, yeah, my clients are smaller, so they don't really need a full-time person. Well, everything else I just mentioned stays the same. The process, the technology, the office, the computer. The only thing that changes is you cut that salary in half. Mm-hmm. You can still sell it cheaper than they can incur the cost to replace you with in-house offerings. So your only real competition is not that they're going to do it in-house. The real competition is your fellow bookkeepers. Mm-hmm. And the way to protect yourself from there where they're underpricing and therefore price cutting you would be to do what they don't do, right? Not just do what they do more efficiently. That's step one, but to do what they don't do. So how many of your peers offer controllership services where they analyze what's happening with spend to help the client determine where they can spend less money in the future? And any business owner, I don't care what kind of poor decisions they make, if you tell them that they can cancel this subscription, or they can stop that cell phone, or they can shut off that device and they can save money. I mean, if you got one that doesn't say yes, then pick another client. There are plenty of them out there. Mm-hmm. And start saving clients money instead of just recording the money that they spent. You're going to be in the 5th percentile of excellence. Nobody can compete with that. You just have to lead with that. And that's an outcome you can drive.
Yeah, that's a really good one. Thank you for talking through that.
Yeah, absolutely.
Hopefully people took notes. We are getting closer to the end of time, but one of the things that I also wanted to get your take on is, I know a lot of the firm owners you work with are upwards of $500,000 and over that. As we talked before we hit record, a lot of my listeners are trying to get to maybe $250K, a little higher than that. And I wanted to know what kind of common mistakes you see as people are growing into that zone, things that maybe they should avoid or pay attention to.
Right. So one of the common mistakes is try to price competitively. Don't price competitively, price to your value. Yeah. Then ask yourself how you can drive value up so you can drive price up. So that's that. You heard me say all that. That would be a good way of saying that's the first checkbox. The next one is when you are the sole producer, because if you're doing about $250,000 or less in revenue, I'm assuming you're a sole practitioner. If not, that's a whole other problem we'll unpack on a different podcast. But okay, so we're assuming that you're a sole practitioner. You are the producer. You are also the owner. And then you have general and administrative expenses. But what I find people do, since 1/3, 1/3, 1/3 is the formula, you want a third going to general and administrative, you want a third going to owner, and you want a third going to producer. Well, when you are the producer and the owner, don't take a third, take 2/3. Put 2/3 in your column. Now, it doesn't mean you need to draw that out. You could retain it in the company, right? We all know the word for that. It's called retained earnings. You could retain it in the company, but you need to allocate it to yourself because you're both the producer and the owner. Now, what that will do when you set that model up, it will protect price because you can't afford to take certain clients below a certain price, and you're going to turn them away appropriately. Then when you are ready to hire, and when you start getting much above 250, and especially as you approach 300, 350, 400, you're way overdue. You need to bring on that other professional. And of course, in a world of AI, excuse me, in a world of AI, that math may change, but for right now, we'll just go with this. So when you do, if you don't have those margins baked in, you have no 1/3 to give to the employee.
Right.
And you're locked in. You literally can't hire, or you have to take a loss to hire, or you have to fire every client or reprice every client to hire. And then you hit this ceiling. It's not a glass ceiling, it's a concrete ceiling.
Yeah. And that's when people get to the point of throwing in the towel.
Yeah, because they're working way too hard for no upside, no leverage. Yeah.
Yeah. So yeah, I completely agree with that. I hired really early on because my intention was never to work full time. And so I, from the very beginning, have had a similar pricing model of like, there's this 50% is allocated to me and I run the rest of the company on the rest of it. And so if I can't price accordingly, then I don't take on that client. Right. And yeah, whether you have part-time or full-time, the breakdown is all pretty much the same as long as you start with that from the beginning.
Absolutely. Yeah. And then you need to have, and I know we're over, but you need to have a process that you have defined, because when you bring that person on board, you have two different risks. If they're not competent enough to run it end to end with their own brain, then you end up with quality control problems and productivity problems. Mm-hmm. If they are smart enough to run it from end to end with their own brain, because you hire somebody really experienced, then you end up with a couple of different bookkeeping practices under your name. That's their clients become their bookkeeping practice, doing it their way with their secret sauce, and then you have your way with your secret sauce. And you're just kind of a house of bookkeepers. You hire the third and fourth one of those, and you get 4 different ways of making the recipe. So you want to hire people who are competent, and you want them to run your rails. Don't hire before you have the rails.
Yeah. I do see, I mean, there's definitely a balance between wanting it to be perfect before you hire and actually just like having the baseline there that you can build on as you hire. But yeah,
but at least have the baseline. Define the tech, define the broad stroke processes around each client. And then you and the employee that you bring on board, the team member, you can perfect the process as you go, because now you'll have a little extra capacity to make that happen. That's a good point, Serena. If you wait until you're ready to hire somebody, get married, or have a kid, you'll never do any of them.
Exactly.
And I've done all 3. So.
Yeah.
Wasn't ready for any of it.
Yeah. And it's worth it. It's worth it in the end.
It's been worth it on all 3. That is correct.
Yeah.
Yes.
So if a listener wants to connect with you, where is the best place to find you? And when is Scaling New Heights this year?
All right. So I'll answer the same way with the same URL. It's mylastname.com. That's Woodard with 1 W, woodard.com. And if you go there under events, you'll find Scaling New Heights. It's coming up in June. And you did mention correctly that if you're in our coach program, you're typically at or approaching $1 million or more. But the folks that come to Scaling New Heights, everybody walks those halls. We have plenty of people that are going to be right in your peer group, listeners, if you're just getting started out. We even have a meetup for brand new business owners in the accounting profession that you can go just meet people that just started in the last year, if that's you.
Oh,
but
awesome.
So just come join us in June. That'd be great.
And where is it at?
It's in Orlando.
Awesome. So if you want to take your kids to Disney World and hit up Scaling New Heights, a lot of people do that.
Disney World. You can look out your balcony at all 4 parks in one view. We're right across the street. Yes.
Awesome. Well, thank you so much for your time. I really appreciate it. And I can't wait to have another conversation with you in the future.
Anytime. I'd love to come on.
All right. Talk to you soon. Thank you to everyone who helps make this podcast possible. Content and interviews are produced by me, Serena Shu. Our intro and outro music is written and performed by my brother, Ian Gilliam. Editing is also by Ian using his awesome sound engineering skills along with Descript software. Hosting and publishing is by Buzzsprout. And you can check out the show notes for links to all of these amazing resources and resources mentioned in the episode.
Be ambitious.